what in the world is going on with mortgage rates? So my name is Dan Free. I try to do this report every day to inform you guys what in the world's going on in the markets, especially with real estate and mortgages and loan products to get you guys into a house in 2023, if that's your prerogative. So in today's event, we're going to talk about the economic calendar for the week, what my thoughts are in regards to the data that's coming in, how that should be affecting mortgage rates. Why we talk mortgage rates is because I'm a mortgage advisor. I'm licensed in all 50 states. So if you're out there looking to get pre-qualified or maybe kick the tires and see if, what can you qualify for, please don't disqualify yourself. We're getting a lot of people applying for home equity loans. So if you have a lot of debt, but a lot of equity in your house as well, please reach out to us for that as well. So we have a link down below. We do a consultation call with everybody that's looking for a mortgage. Why do we do that? Well, it's unique. Most people don't do this. If you're looking to one of those big box companies, you just go online and you have to fill out all this data. You don't know who you're dealing with. And so we'd like to give it a personal touch. So please reach out to us to kick the tires on all kind of mortgage products available for you guys. So in today's topics, we're going to talk about mortgage rates, why the spike recently, and then the economic news for the week. So let's get over to it. The CNBC headlines that we have right now, nothing into it. Alex Chriss named PayPal CEO. So nothing really here in regards or should really be affecting mortgage rates this week. We go to the economic calendar. Here it is. So it's kind of a humdrum week. Today we have no data in, but you're going to see here in a second, the bond market's not liking some data. And I just can't put my finger on what's going on in the last week, because last week we had inflation numbers coming in basically in check, but we saw mortgage rates spike. So there's a disconnect right now with the bond market and everything. So I even did research all weekend to figure out what's going on, and there's really no catalyst for any of this stuff. So we're going to continue to monitor that. So let's get over to this week's news. On Tuesday, we have retail sales coming in. Are people starting to buy less? Keep our fingers crossed there. The expectations are, yes, that they are supposed to. If you look at the numbers on the board that coming in Tuesday, core retail sales, last reading came in at 0.2. It's expecting to come down 0.3. But then on here, retail sales in general, month over month, the last reading came in at 0.2, supposed to go up to 0.4. So we're going to pay attention to that. Building permits. Now, this is the lifeline right now for housing, because the existing homes, when I talk existing homes, I talk people, the house that already exists, somebody lives in, and they want to put that house on the market. Well, the average rate out there right now for people with a mortgage is 5%. So a lot of people are not putting their house on the market because they're like, well, if I sell my house now, and then I have to go buy another house. The rate today is 7.25, and I'm at 5 now. Unless I really have to sell, I'm not going to sell. So that's that part of it. Oil inventories, I'm not going to look at that because it is so volatile, but this is the conundrum right now. Oil right now is I'll say it's the wild card in inflation, because oil has rallied about 25% in the last month. It's the last month. Those numbers are going to roll over to inflation numbers, and it might not look good at the next reading. Then on Wednesday as well, FOMC meeting notes. What the FOMC is the Federal Reserve. They're going to come out and give us the notes that they had from the previous meeting that they had. Not really expecting any changes there, but what their projections are ahead. So we'll look at the dot plot here in a second. And then on Thursday, we have coming in initial jobless claims and just some jobs numbers. So what we're going to look at next is what the markets are telling us, what the Federal Reserve is going to do. Are they going to increase rates here coming soon? Are they going to sit on the sidelines? What are they doing? So what we do there is we go to the CME, the Chicago Mercantile Exchange, and they give us basically a Fed watch tool. It's the CME watch tool. Stay tuned. The next Fed meeting is in 37 days, 4 hours, 38 minutes, and 28 seconds. Okay, what this is telling us, though, what's the likelihood the Federal Reserve will change the federal funds target rate at the next meeting? Well, the Federal Reserve's their target rate, they control one thing and one interest rate. It's the federal funds rate. Basically, what that rate is interbank lending. It really doesn't have any direct correlation with me and you, with credit card rates and short-term investment or borrowing tools. But what it does is when we increase the fees and the rates at banks, what are they going to do? Well, they're going to increase their rates and their fees to us, the consumer. So that's why we watch this. We roll over here. What's the probability that they'll raise rates at the next meeting? Well, this 88.5% chance isn't that they're going to raise rates. It's basically that they're going to stay steady. So right now we have the federal funds rate at 5.25 to 5.5. So it's expected to stay there and basically stay there for the rest of the year. So a lot of analysts are saying, okay, there's probably one rate hike coming, but a lot of this data is telling us no, there's no increase coming. There's one thing that interests me when it comes to a lot of this data is that the dot plot. What we follow on the dot plot is what the Federal Reserve, the members of the Federal Reserve, where do they expect rates to be in the future? Well, right now in 2023, they're expecting rates to be about 5.5 to 5.75. Well, we're at 5.5 now, so there might be 0.25% raise in rates coming. When that is, I don't know, because the probability of it happening isn't here yet. But the interesting thing is in 2024, if you see that chart, where do they expect rates to be? Well, they expect rates to be about 4.25 to 4.5. Okay, we're at 5.5 right now. So the markets and the Federal Reserve as well, members of the Federal Reserve, are expecting rates to come down 1% in the next 12 months. Well, what's going to cause this? Well, inflation. So we need inflation to start cooling off even more. We need to get into the 2 range, and that's when the markets are going to finally say, okay, we think we're on a right path of getting inflation back in check. So now the markets can basically balance out and things can come back to a little bit more normalcy. But in today's market, we don't really have much out there. Hold on one second. Let me refresh my data. Oh, for some reason, my markets just went down. Select another coupon. 5.5 right here. So the markets, I don't know what happened, folks, but my numbers just went off the charts. So right now, here's what you're seeing. The 10-year treasury is going up in yield. Okay, so we don't follow that. What we follow to follow mortgage rates is the mortgage bond. So that's what you're seeing right through here. The MBS 5.5 mortgage bond, what this number gives you right here is what's happening to the price of the bond. And then right over here, what you're seeing is what's happening to the price of the bond. So the price right now is coming down. Okay, that means mortgage rates are going up. There's an inverse or a yin-yang effect. How does that work? How does the price go down? Let me explain this to you. So let's take a bond. Let's take this particular bond, a mortgage-backed security. Let's say next year, for example, when I get a bond, the maturity price is usually $100. Okay, so let's say next year when I turn in my mortgage-backed security bond, I'm going to get $100 back. Okay, so that's its price, final price. Well, let's say today I give you $100, and you're like, why would you give me $100 today and then next year you get $100 back? But play with me here. So I give you a high price today. Okay, so I give you $100 today, and then next year when that bond matures, I get $100 back. What is my return? It's zero. I didn't make any money. So my yield is 0%. Okay. So let's drive down the price so I can show you how yields increase. So let's say today I give you $50. So I give you $50 today. Next year I turn in my bond and you give me my $100 back because it has a maturity value of $100. What's my yield? My yield doubled at 100%. So I doubled my money. So the yield is 100%. So do you see how when the price goes down, the yield goes up? So that's why we follow the mortgage-backed securities market. Let's get over to where mortgage rates, well, let's say where they ended Friday, and we're teetering on a 52-week high. We're about 0.25% lower than it is right now. But right here are the top 6 programs people use when they're buying or refinancing a house. This is mortgage rates issued by Mortgage News Daily. This is not any single bank's mortgage rates. Okay, what Mortgage News Daily does is they do all our work for us. They survey lenders all over the country and ask them, if you had a borrower that had these 5 criterias, they were buying their first house, it was going to be their primary home, and it was a single family home. It wasn't a 2, 3, 4 unit, anything like that. It was a single family home. They have a 740 credit score. They're putting down 20%. That's basically where your mortgage rate would be nationally on an average. So you might say, Dan, my rate's higher than that. So am I getting ripped off? Well, maybe not necessarily. You probably aren't putting down 20%. You might not have a 740 credit score. It might not be your first house. So there might be a lot of things that's there that just, are different. So how do you figure out, one, if you're getting a good mortgage quote now, or if you don't have a mortgage quote, please let us help you. We're one of the country's largest mortgage brokerages. We're set up with over 77 of the country's largest mortgage companies, banks, credit unions, and so forth. We can offer you their programs and their rates. So let us help you do your shopping. But one thing that people in today's market, a lot of people think they know about their credit scores, but they really don't. So I actually created a website to help you guys with your credit scores. I know I kind of went off on a tangent there in a second, but a lot of people we talk to on a daily basis, they're like, Dan, you pull my credit and it's, the credit score I'm showing is 50 points, higher or lower or whatever else. So I created this website, creditscoresandmore.com. Please check it out. There's a couple tools in here that I think you'll find very valuable. One, free credit scores. Click that. It's going to take you to a system that I use. It's free. It's going to offer you some products and things like that. Don't sign up for them. The free version is more than enough that you need to manage your finances. But the one area right here, your true credit score, this is actually going to give you your FICO scores. Your FICO scores. Those are what banks like us use when we're trying to get you a mortgage. So you want to focus in on that, get your true credit scores, and focus in on the mortgage score because you have over 35 different scores. Bet you didn't know that. And then the last piece of this I just added recently is Smart Credit. This is a system that I use. It tells me how much I owe on my balances, what are the best ways to pay them, what days, like I got notified over the weekend that I should pay on my Capital One credit card bill today to get the maximum benefits in my credit scores. So this is a great system. It's really cheap and reasonable. It has I think it's a 30-day trial. So check it out. I use this personally and I wanted to share that with you. But if you're out there and you're like, Dan, I need some help trying to get pre-qualified. I'm trying to get pre-qualified to buy a house because my landlord just kicked me out. Or, Dan, I got a ton of debt and I got a ton of equity in my house, God bless me, but I just don't know how to access it. We can help you get a home equity loan possibly to pay off those high interest rate credit cards with the equity that you have in your house. How do you do that? How do you reach out to us? Best way to do it is give us a call, 844-775-LOAN, 844-775-5626, or you can click right over here. This isn't going to actually have you apply. It's going to schedule you with a day and time that you can talk with us one-on-one with a mortgage advisor. Might be me or might be somebody on my team to answer any and all the questions that you might have. If you really don't have any questions, what we're going to do is just send you the link to apply online. Keep an eye out for that so we can help you immediately once you finish that application. So thank you so much for watching, guys. This week, like I said, we went over the economic calendar. I don't really see much coming in regards of mortgage rates should go up up a lot from here or down a lot from here because there's just no data. So thanks for watching. I'm going to ask you one thing today. That one thing is only, please, if you have not yet subscribed, please subscribe down below so every time I post a video, you get an alert. Thanks so much for watching, guys. God bless. See you tomorrow. Bye-bye.